Hey guys, can you confirm that you can hear me? You can unmute yourself or type in the chat. One sec. Okay, cool. Okay, good. Anyway, listen guys. Super. This session is recorded, so you guys are gonna have the recording of this. Let's go straight into it because we do have the FOMC tonight, and that's gonna be a really important one. Tell me if you can see my screen, please.
Yes.
Okay, good. So, let's go over what's happening. First of all, we have the FOMC today. I believe that today is the day that the Federal Reserve will start hurting Trump because, like I've been saying, the Federal Reserve has had a problem or a beef/war with Donald Trump, who's the President of America. They've been fighting with each other a lot, and even yesterday, Trump released a tweet about the Federal Reserve calling on them to lower the interest rate today by 1% and continue with QE, which is quantitative easing. And for you guys to understand what quantitative easing is, it's basically money printing. The more money they print, the more they stimulate the economy, the more, well, they try to increase inflation. But the more money they're printing, the more they're giving to the banks. The more they're giving to the banks, the more the banks are giving loans out. And when they start increasing interest rates, that's when they make the money. So the Federal Reserve makes money by interest rates. So do banks. So the higher the interest rate, the more money they make. Simple stuff. Anyhow, I believe that today is the day, and I'm going to show you why I believe today is the day that you're going to learn something new today in terms of my analysis. So for me, it's very important to keep teaching you guys. I like to take it slow. In the beginning, I was teaching you guys the patterns that we use, which is the free PipsMatter patterns, the contraction, which you see on your screen right now on the DAX, the free higher highs, lower highs, lower lows, and higher lows. And then finally, the classic pattern. Now, the classic pattern doesn't come up all the time, but it's there. So I want to show you something here. Let's go on the SP 500. We've got a contraction here. As you see, I'm already getting prepared for other scenarios. You always have to be ready for different scenarios in the markets. And if you go on the weekly chart here, there is a scenario which is in play, which is high, higher high, highest high, and then a crash. Hopefully that's not the case because I'm selling this stuff heavy. Next, and very important thing, I'm on the weekly chart. This is what I want to teach you guys today. This is very, very important. I'm teaching you about time periods. These are very important cycles. If you connect them to specific support and resistance levels, such as double tops and double bottoms, they work very, very, very well. And in this, and the most powerful ones are the weekly, the daily, the monthly, and the yearly. And they go in vice versa order. So what I mean by this is the most powerful one is the yearly, then the monthly, then the weekly, then the daily. In this case, as you can see, from the drop here of this contraction on the left, one sec, I'm going to point it with an arrow so you guys can see it. So there's a contraction here with blue. On the weekly, it doesn't really look beautiful, but if I go on the daily, you'll see it with a fake out. There was two fake outs here, fake out one, fake out two, but contraction remained intact, just a couple of days out, and then boom, back in, then out here, and then in no time, right back inside, and then it crashes with this pin bar over here at the breakout. Now remember, it broke out, it retested, and then went down. So breakout, one retest, two retest, 3, 4, 5. 5 days of retesting, and then it comes tumbling down. So moving on, weekly. What do I want to teach you guys today? What you see, it says 30 bars right there, 210 days. We're coming up to the week where I believe that the S&P 500 should be popping out of its contraction. There is no other major news planned for the week that could move the S&P 500 aside from the Fed. Of course, if that doesn't happen with the Fed, then we've got Donald Trump that can put a tweet out and the markets can tumble. We've got very weak data across the world, and we just got bad ISM out of the US. Good employment, but bad production, indicating a contraction. So when production is going down, that means there is no supply. Think of it like this: that if there is no supply, that there's no demand. right? So that means people aren't buying, therefore the production lowers, meaning a trade's not going great. The other thing that could happen that could move the S&P, the DAX, and everything else down is bad news from China, bad news from Europe, things like this. But I don't think that could be the case. I think today is the day we start going lower. I told you guys in messages before that I believe that the Fed will hurt Trump where it they'll hit Trump where it hurts him the most, and that is in the stock market, because that's his big thing. He's been preaching, oh, look what I've done, look what I've done, look what I've done. Now, if you guys check these current levels here, we have very strong moves up and then very strong moves down. We've tested this range of a level, which is here, there, and now we're almost at it again. Hopefully we don't go all the way up here, because that's just going to piss me off. But there is a possibility. That's one very important thing you guys need to understand, that we can't be certain 100%. That's why we need to stop out levels. Anyway, why do I think it's going to go down? Well, the time factor, 30 bars, 30 weeks apart. So the first week of October, October 1st, started here. This is the first week of October, and we had that breakout. And 30 weeks later, we are in the first week of May. And we're trading it right now. So you can see this right now here. We're in the first week of May. We are almost at the end of the contraction. We are behaving very, very well at the top, and very easily we could pop out. Hopefully this is the end of the contraction. We don't have more retests, because I've been building a position on this one for what, 3 weeks now, buying and selling, hedging here, hedging there. I do this on the MAM that I'm running, multi-account management, where I'm managing other people's funds. So I can't release all these kind of trades, because you guys might get it wrong. So I cannot release hedging trades. I do it personally on the fund management side. So anyway, I think that there is a very good chance that it could go down. I mean, yesterday's bar here is kind of pissing me off, because we did try to break out and then we closed up. Today we're going down. Let's see if it works out. There is a good chance it will, but we do have 2 pin bars. Check this out. Sorry, that's not a pin bar. That's a bullish long-tailed bar. We'll see if it holds. Generally, the contraction should end. And as you can see on the DAX, we're already out of the contraction. You guys can see that the contraction is here, and we're already out. We retested it once, twice, and now we're going down. I've added a new level here. I'm going to show you what I did. I added a 23.6. No, sorry, the 36% level. 36. So on the downside, we always ignore 23.6 and 30. They're the support levels when we are, well, just ignore them and take profits. But I added a 36% here as a main support. And if you guys can check, I want you guys to pay attention to where these levels line up. This is quite important stuff, because it lines up at key consolidation levels, support resistance levels. You see, they've all lined up beautifully with one key trading level. You see that? Here, here, and there. And if I do the same thing on the SP 500, you'll see exactly the same thing happening. And that's why we like these levels. So boom, 31 is right there. Resistance, support, 36. And we got here another support level at 50%. And then we have a resistance and support at 61%. You see that? So they line up beautifully. That's why, and we never know really which one's going to be targeted. I like to target 50% always, because 99% of the time when the contraction breaks out, it actually hits onto it. And I'm going to show you CAD JPY, that trade. I don't know if anybody profited on that one. I went out a little earlier because I'm building that Euro USD buy position. Check this out. There it is, 50%, boom, down. You guys see that? Check this out. That's why we like the 50% level, because it gets reached. So there's the breakout, started going up beautifully, came back down. I showed you there was another contraction on the 1 hour here. We made a double bottom, and then we went straight up to the 50%. I closed out all my buys in profit. Thankfully, I went out, and hopefully you guys did too at 50%. I went out a bit earlier than 50%. So I had quite a few things I want to talk about, but I didn't write it down. Anyway, I'm really expecting that indices will go down. Let's go on the UK 100 here, and I'm going to show you what's going on there. We've got that possible head and shoulders here on the 4-hour, and it's just coming right down off it. Here's the head and shoulders. We've got the shoulder, the head. Is it? One sec. What am I doing wrong? I'm doing something wrong. One second. Okay, yeah. So yeah, shoulder, head, and then shoulder, and then down we go. So this one's already tumbling very nicely, almost 1% down for the day, guys. Now, do you guys know why that is? It's down because of this data. Bad data. Look at this. Where's the UK? Manufacturing 53, money supply lower, mortgages lower, and yesterday, if you guys check yesterday too, was it yesterday that we had? No, it wasn't. So generally, it's also Brexit and bad data, and also the strong GBP. So let me show you this. Strong GBP, contraction, breakout. You guys see that, yeah? Nice little contraction there with a breakout. Euro GBP surely going lower. There it is. AUD GBP going lower. GBP NZD going higher. So if you guys check this, you'll see that the pound's gaining. Now, I've taught you guys this, and I've told you many times before that. You see, I lost it now. I forgot which one it is. One sec. So a stronger pound weakens the FTSE, because the FTSE is, oh, which one was it now? Which one was I on? There it is. No, is it this one? It's not Rwanda then? Oh man, I lost it. Damn, I lost it. Because this one's closed, as you see, it's not moving. Price action is already down. So I need to find it now. You guys got a question. So anyway, let me continue. Yes, because the GBP is strong mainly for the reasons of a weaker, what's it called? Let me put it to you like this. Right now, we're getting a shift in safe haven assets. The US dollar used to be a safe haven asset for a long time. So when stocks would go down, the dollar would go up. But if you guys check the last major move in 2015, I'm going to show you this. This is very important. 2015, we had a nice little crash in the markets. So we did the same thing in 2011. Where's 2015? So there's 2015. This moves down here. They were pretty interesting. We had 2016 as well. Ah, here it is. This is the one. So August 2015. Sharp moves down. Now, this was mainly caused because of China. Very bad data out of China. Contraction in China caused the flash crash in the markets. The markets started moving lower. Now, the FTSE and the GBP, they have a negative correlation. What that means is that when the GBP is gaining, the FTSE becomes weaker. And the main reason is because the FTSE is compiled of 100 companies, the strongest and biggest companies such as Philip Morris, Bentley, and blah, 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 are in the FTSE. Now, they don't depend so much on the UK for their growth. They depend on foreign exports. So when the pound is weak, they tend to do much more business because people stockpile on their products. But when the pound is strong, they don't really buy much of their stuff. So that's why the FTSE weakens. And you can see that with Brexit. On Brexit, during the day of Brexit, the pound weakened heavily, but so did the FTSE. But the FTSE recovered very, very quickly and started a very strong bull run. So they have a very negative correlation. Strong GBP, weak FTSE, always. So how am I going to find the DAX now? the one that's open. How did I find it before? The 30 Dow Jones, Germany 30. No, the space 30. I need to find it. Oh, come on. Yeah, it doesn't look like I'm gonna find it. There it is. Okay, so if you guys are using this, it's GRXEUR, right? Germany here, and you'll find it right here from forex.com, CFDs. So yeah, check this out. So we've got a breakout of the contraction. I mean, this contraction can be edited a little bit. I'm going to show you like this. So we could edit it a bit, and I mean, it could become this. One sec. It's always good to edit it out and just to be sure that you're right. So I mean, it could be like this, and there could be another move up or a breakout here. But generally, you guys need to understand that when we are close to the end, and the EMA, the 13 EMA, starts getting tighter and tighter and closer to price action, that means the breakout is very, very close. Based on the EMA, the breakout already happened on the S&P, on the daily. On the DAX, the exact same thing has already happened. The EMA is out. It's been out for a while, and it's indicating that price action should go lower. But I don't care about the EMA so much. I just use it as a breakout confirmation. Now, there's a couple of lessons that I want to go over with you guys. Let me find that. So I wrote it down today, but I'm going to go over these 3 points right now with you guys. So the first point, and this is a very important point, is that you guys need, if you want to be professional traders and actually make money in the markets, you need to start reading a lot. So instead of going on Instagram, on Facebook, watching a movie or something, take those 15, 20, 30, half an hour, minutes, and just go to basic websites like, let's say, investing.com, okay? Go to investing.com. One sec. You go to investing.com, go on the front page here. Go to Forex Factory. I don't check anything on the Forex Factory from the forum stuff. I just come here and I check this. I don't touch anything. I check this. Latest news. Is there anything interesting? Okay? We see this. We see that the US PMIs have dropped. Look at this. 50. ISM manufacturing prices have dropped to 50. You guys know what this means. When you see something like this that has numbers that range from 1 to 50, this here, this means contraction. 50 is the buffer zone between expansion and contraction. Anything above 50 means expansion, even if it's 50.1. Anything below 50, such as 49.9, is contraction. So this here means that it's stagnant. Nothing's happening with the ISM manufacturing prices. And if you check here, they've been dropping. They have a big, look at this. Look at the trend. 70s, almost 80s, 70s, 60s, 70s, 60s, 50s, 40s, 50s, 40, now 50 again. So generally you can see that the ISM manufacturing prices, which you can really see here what it measures, level of diffusionism based on the surveyed purchasing managers in the manufacturing industry. It sees a downtrend. You can clearly see that here. You just click on this and you just see the trend. There's an uptrend here. Look at this. From 2015, what I told you guys, you see August, very bad. Dropped down to the 30s, very, very bad. And then started going up. The uptrend, and now we're coming back down to the downtrend. So that means, and we're seeing it all over the place. China, Australia, New Zealand, Japan, Europe, UK, USA, Canada. There's Canada too here. Look at this. Contraction, manufacturing PMI. Also, this new stuff here that you guys see. The yellow, the red, the orange. These things change based on importance. So sometimes this thing here, which is normally yellow, which is now orange, can also become red. It used to be red 3 years ago, I remember. But anyway, ISM manufacturing PMI has a nice downtrend too. Check this out. We've been up in the 60s here, started going down to the 50s, 60s, 50s, 60s, and boom, 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 and we're coming closer and closer to the 50 mark. Now the ISM is very important because this is actual manufacturing in the US and it's coming down. So we'll see what the Fed says here. Hopefully they can help us with the trades on the indices, which I think they will. So yeah, number one, you need to acquire every bit of fundamental information. Even though it's not important, we don't use it to base our information. It's very important to understand what's going on. Apple, okay, this is kind of bullshit to be honest with you guys. Apple lifts S&P 500 to new record high ahead of that decision. Sure, it opened high, but it's going down. So don't pay attention to this. Do not ever make a trading decision based on the stuff you read here on Bloomberg or Reuters. There's a million websites. I mean, look, I've got a lot here that I can send you. But yeah, you never base a trading decision on this. You use this and connect it to the chart. So number one is gather information. You need to gather intelligence so you can build your knowledge. That's how you're going to build it. Then when you don't understand something, you just shoot me a private message and tell me, Dennis, what does this mean? Or what are they talking about? Or whatever you want to ask. You ask me, I know it all, I'll explain. Point number two, you need to be checking the charts daily, preferably twice a day, especially if you've got trades open. I'm only focused on this right now. DAX, S&P 500, and Euro USD. But it doesn't mean I'm not checking other charts. I continuously check, especially Euro pairs, dollar pairs. I check other indices to see if they're all giving me the same signal. And right now, I've got the same signal everywhere in the markets that the indices are going to come crashing down. Is that going to be tonight? I can't guarantee that, but there is a good chance of that happening. Now, very important. The dollar in 2015, when the S&P and the NASDAQ and everything came crashing down, the dollar weakened significantly, almost 3% in one day against the Japanese yen. Also, Euro USD went up. Now, you guys see this here. We've got a contraction leading out of this weekly contraction. Check this out. You see we have a fake out straight away in. There's TP1. Whoever bought down there when I told you to buy, which was, I mean, we can check it here. There's the trade alert. It wasn't too long ago. It was last week. Got JPY. Euro USD. Entry. There it is. Let's check the entry. And then SL is 10.94.5. So that's the entry. There's the entry. One sec. That's my son playing, just so you guys know. So you got a contraction there. There's the entry. I entered somewhere here, I think. I didn't enter on the exit. It kept going down. I started adding on the breakout. The stop loss was never reached. I'm going to show you this here. There's a stop loss, never reached, and we keep going up. Now, what do you want to do? When you're analyzing charts, when you have a trade open, what is one very important thing you guys need to do is consistently check the trade. Not just open and see the same things you saw before, but look for new information. Well, is there a chance of it breaking out now and going up to the take profit? Yes, there is. So let's go down to the daily. What's going on the daily? We've got a breakout of the EMA. We're above it. We're approaching this key trading level here, the blue one, which we want to fix now on the daily so it can take the daily charts into account. And this is it here. So the resistance on the daily is the black level. There it is. You see it? Clear resistance, right? So we got that down. Then we go down to the 4 hour. Is there a contraction? Is there something happening here that might indicate a reversal? No, a very, very healthy bullish move. We even have a continuation here. Perfect add-on area. If you guys remember, I sent you a message about this. I can find it. And you saw it. I said that perfect add-on area, Euro USD. Market brief. Anyway, we don't have too much time, but focusing on building Euro USD. There it is. Great add-on time on Euro USD. Yesterday, 7:29 p.m. A little over 24 hours ago. So somewhere here, somewhere there. BTC -4. This candle here. Is it? Yeah, there. Perfect add-on time. So you guys see this finished, then this came, we said perfect add-on time, boom, 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 and it's going up. Now, what you want to do is consistently be checking this, and you go on the 1 hour chart too. You don't have to go down lower than an hour, but you can find support levels where you can add on to your trade. Check this out. So we clearly have a nice little trading level here. Support, we got a breakout here, boom, support, another add-on. So you see, you could have bought here, bought down there, and bought here, and you would have had 3 compounded positions, giving you a much healthier profit. But you need to be checking the charts daily without the intention to go long or short on anything until you do not have specific information. Patience is a very important thing in the markets. Aside from patience, one very important thing that you guys need to start doing is having very good money management, because that's crucial to successful trading. We're going to start doing live sessions probably almost every day in May. We're going to start this month doing lots of live sessions, lots of trainings on different things. So, point number 1, read. Read like crazy. Point number 2, check charts daily. Check them. You don't have a trade going, you're maxed out on trades, check them anyway. Keep checking them. That's how you develop good habits, and that's how you're going to make money and protect yourself. And number 3 is know the fundamentals, follow them, keep them in your trading, but do not make trading decisions based on fundamentals. You have to only make trading decisions based on the charts. The charts are what tell us what's going on. And in our next session, we're actually going to be going over the Dow Jones Theory, because that's what I base. Before I even read about the Dow Jones Theory, I believed that everything was based on the charts, because I used to trade a lot of the news, NFPs and stuff. I predicted so many of them in a row. Made so much money just trading the NFP. How did I do that? Just by the charts. I didn't care about the numbers. I don't even look at the economic calendar. I just know when the event is coming out. I check the charts, I see what's going on, and I'd say buy, sell, buy, sell, buy, sell, and I'll do great. And that's when I realized that the chart knows exactly what's going to happen. Anyway, a little while after that, I read a little bit more. I was reading a lot of books about trading, and I read about the Dow Theory. The Dow Theory says that the chart governs price action. It's saying where price is going to go. But one very important thing that you guys need to know about holidays like today. Holidays like today, the market can do one of 3 things. Go up, go down, or go sideways. The market can also do, within those 3 things, it can do a trend. And trends cannot be manipulated. There cannot be any manipulation in a trend. So they can come here and manipulate price action on this day here. This is a daily chart. You've got a big trend going, and then boom, they take everyone out, and they continue the trend upwards. So manipulation can happen in a day, and usually it can happen very, very easily on days like today, which is a holiday in most of the world, but the New York Stock Exchange, NYSE, is open for business. Hence the reason why we have data coming out. So the UK was open, Canada's open, and the US is open. Everyone else is closed. So they can manipulate the markets very easily. Yeah, I think that's pretty much it. But one very important principle when it comes to money management, which is risk management, for you guys to understand about the markets, for you to be able to command the market, you know, when people just get so stuck on an idea, like sometimes I get stuck on an idea that the indices are going to drop and, you know, blah, blah, blah. Before you can do something like this and put your money where your mouth is, you need to also obey the market. Before you can command it, you need to be able to obey it. As you can see, we're finding support at this level here. Hopefully we won't have a spike up and then spike down and stuff, because manipulation can easily happen today. And remember, there is a Fed press conference today. Questions are expected, so they might retaliate against Trump. Now, if we see a little war of words going on between Trump and the Fed, that will what's it called? Cause. Sorry, something popped up on my screen. I got confused. It will cause fear. And remember what happens. The market moves much stronger on fear than it moves on hope. This is hope, guys. This is hope. You see, market moves up on hope. It moves slowly and steadily on hope. But look what it does on fear. Look how aggressively it drops on fear. Let me show you this on the daily. You'll see that. So it goes nicely up, boom, 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 boom. But fear, bomb. You see that? Goes up nicely, and fear is a much more powerful emotion than hope. So there is some fear coming out today in the FOMC. You're going to see the DAX, the S&P, NASDAQ, the Dow Jones, they're going to all come crashing down. And guess who's going to open bad tomorrow? Australia's going to open bad, Japan's going to open bad, and it's going to start to wave, and maybe, hopefully, we'll have a Black Thursday. Okay, time's up. That's all I've got for you now. I need to start preparing for the FOMC, and I want to spend some time with my wife and son. So thank you guys for coming. If you have any questions, shoot them in the community so everybody else can see. Deal?
Thanks, Denis.
Thank you too, guys. Thank you too. Okay, that's it. I'll end the session. You got questions? You ask the questions in the community. Likewise, Ivan. See you, Francis. See you, Oresti. Bye, guys. I'm ending it now.